lot of things happen, and just stay with me and make sure you like the video, subscribe, leave any comment, and if you have any question, feel free to let me know. So as I said, a lot of things happen, a lot of things in the news. The US debt ceiling was on the news. So let me just share my screen and you will see what we have to cover today. So there's a lot of course, so stick to the video. So as I was discussing, so the plan of this week, as we have been discussing in the previous week, right? So the first thing to do before stepping into any trade, so make sure that you always check the news. For me, I'm checking the news at 8:30, and I'm typically looking for important events. As I was sharing with you in the previous week, you need to have a calendar in which you are keeping track of the important news. And I shared some of the important news. Could be like in this week, the US debt ceiling talks. Why does this type of news matters? Because it could have an important impact on the decision that the bigger investors will make on the economy. So they could decide to sell off or to buy, or just to buy more of the SPY. So after checking the news, I've always do some volume analysis, typically again just looking to see if there's a lot of people buying or selling. And the new topic of the day is this. I'm going to be discussing setting stop loss step by step. Also, I'm going to introduce you to the notion of candlestick chart and its importance. I'm going to also talk about the line chart as well on the side, and then I'm gonna show you the trades I've been making that 5th week, and I'm gonna, the last step, I'm gonna just do a quick recap and some conclusion and things that you have to remember. So yeah, so events to add this week on Tuesday, you have to add the continuation of the US debt ceiling talks. So there will be another meeting, between the president and somewhat, I believe, a representative, of House Representatives, I believe, this week on Tuesday. So make sure that you follow that and stay tuned, because depending if there's any positive progress, then it could be the market could move up. If there's no progress, the market could be pushed further down. So this is my calendar, and I'm just sharing with you how yours may look like, right? So there are a couple of events, and I added, as you can see, that's not the correct spot. It should be on Tuesday, May 23rd. There will be US debt ceiling talks continuation. So you should add that as well. So how to set a stop loss? The step number 1, right? So assuming that you are able to get to this screen, right, and that you are able to open the SPY, and you open the option that you have in your portfolio, then you click on where you see that red arrow. I'm just gonna move my mouse cursor on that place. You click on that, you click here on that down arrow, and that's gonna open up a small drop down menu in which we see 2 things: limit order and stop limit order. And what you want to do, you want to click on stop limit order. What is the difference between limit order and stop limit order? Typically, limit order will only be triggered to sell, because in this case we want to sell if it fall below a certain price, right? And the other order is the stop limit order, which give more flexibility, because in this specific case, it gives you the possibility to sell off if the price fall within a certain range. So there are 2 things to remember. The limit price, I want you to pay attention to 3 things actually: the contracts, the limit price, and the stop price. The contracts is the number of contracts you want to sell for that limit order. The limit price should be always greater than the stop price. And the limit price and the stop price can be referenced as a selling interval, and you may want to make it a little bit wider, because if it's too short, then if the price fall too sharply, then your order might not go through, so it might not be able to sell it off. So just have that in mind. I may make some couple of videos, to talk about this type of details, to show you how important that could be. So just pay attention to that detail. So the next topic is the candlestick chart. So let's discuss about some characteristics of the candlestick chart. A candlestick chart provides and shows the opening and closing price for a time interval. And the line chart only shows the closing price for that same time interval, and it's only made of data points. So let's first just look at some of those characteristics, and just pay attention to those. So what you see below is the graph of typically the two types of candles that you may encounter. The red one is a selling candle. The green one is a buying candle. So the selling candle is made of, as you can see, I'm not gonna tell there are some parts like the wick. I'm not gonna talk about it. I'm just gonna show you. So what you typically see, you see the opening price is on the top and the closing price is at the bottom. And as you can see, the lowest price, so the lowest at which the price could drop is represented as low, and the highest price at which the price could differentiate is represented by high. So similarly, we see for the buying candle, low and high. So the low represent the lowest price, and the high represent the highest price. And but for the opening and closing price, pay attention to this. For the buying or the green candle is the opposite. So the closing price is at the top, and the opening price is at the bottom. Think about it like if the price, because the green candle represents a price increase, so if the price is being pushed up, therefore the closing price should be at the top. Like similarly for the red candle, if it's a selling candle, so we expect the price to drop. So if the price drop, that means that typically we expect the closing price to be at the bottom because the price is dropping. As simple as that. So a candlestick chart may look like the chart that you currently see on my screen. So it's made out of different candles, so it's represented time interval. And as you guys can see, why these candle charts are important, because typically one of the fundamental difference between the candlestick chart and the line chart is because the line, with the information on the line chart, you only see data points, and data made of only of the closing price after a specific time interval. So it could be like every minute your line chart is being updated, and you only see like data points. So to know that the price is dropping from one point to another, you need two, I will say you need two data points. So you could then with those two data points, then you can see, okay, my price is dropping or my price is increasing. So with the candlestick chart, on the other hand, you can basically see with only one candle, you can determine is it a drop or just with that one candle, you can see if the price is increasing or not. So this is a fundamental difference, and it's also something very, very important to remember, because sometimes depending on the type of trader that you are, those smaller details, let's say for example, right, that you are a day trader. So if you're a day trader, therefore what's happening on those I will say smaller time frames might matter to you a lot more. So if you are more like a long-term trader, those smaller time frame might not matter as much. But yeah, but it's always good to have that that in mind, because it also helps you to do some volume analysis, and I may break it down later, but let me know in the comment if you want me to do it. So the next chart that you see on the screen right now is a line chart. As you guys can see, to determine, for example, I'm gonna move my cursor on the screen. So to determine a price increase or a price drop, you need two data points. You need, for example, one data point like this when my mouse is currently on, and one data point like this. With those two, then before you determine this, okay, this is a price increase. So and the other disadvantage of a line chart is because they only show you the closing price. So after every, let's say you want to see after every minute or after every day or after whatever it is, it only show you what was the final price after that time interval, and that's it. So let's talk about the previous trade I made. So I made a couple of trades back that week, but I will say I wasn't really that much profitable because I'm missing some couple of trades that I could share with you. But yeah, at the end of the day, I wasn't really profitable that week, so I'm maybe about breaking it even, like or maybe losing about like $50 compared to the previous week because of that US debt selling talk. You remember that I talked about has a huge effect on the market, so that also impacted the trades I've been making. So a quick recap, right? So always keep track of the news. It's extremely important because again, we are just small retail investors, so we are always only following the price movement of that is being initiated by the bigger investor. Evaluate the order flow or volume. So fundamental analysis is one of the most important. So don't always fall for all those fancy stuff, fancy indicators and all that stuff. So fundamental analysis is extremely important. News and fundamental analysis is extremely important. So, and then the third thing, and something that is new for this week, is you have to set a stop loss, especially if the trade is risky. And last thing, I'm just emphasizing, always try to learn more, but always focus on the fundamentals. Don't deviate from that. Don't try to learn fancy patterns. That doesn't matter. And again, this is my journey. I'm just showing you where you can start yours as a beginner. So that was it for this week. Thank you for watching. I appreciate your commitment, and stay tuned and you will see the outcome of this journey, and I'm gonna keep you updated, and also we're gonna make sure that you learn something new every single week. Thank you so much, guys, and see you. Subscribe, leave a comment on what you want me to post, and thank you for watching.